In this video, I'm gonna give you 5 strategies for high income earners that I typically like to utilize for me to help my clients lower their taxes. And stick around because I'm going to be answering a question that most medical doctors and surgeons have every single tax year. So let's dive into it. One of my favorite ones is to have the entity restructuring. This is actually a great strategy for high income earners that have family members, spouses, and as well as children. With this strategy, you're able to lower your taxable income, shift some of those expenses to a new entity, and actually hire some of the family members for services that can be rendered for your main business. What we can do here is we form an entity in a legitimate way, and this entity is going to support your main entity. This new entity is going to hire family members, support their services to your main business. That's going to drive down the taxable income and then have tax-free income, for example, your children. Also, retirement plans. Retirement plans are key. And the reason why retirement plans are key is because it actually allows you to defer your taxable income into the future. So you reduce your taxable base and you pay less taxes now. But then what happens is the income or the money that you put into the retirement plan is going to grow tax-free. And then you start paying taxes once you reach the age of 59 and a half. You start pulling money out and you start paying taxes then. But in the meantime, you deferred your taxes, growth in your capital account, in your retirement account, and it's going to grow tax-free. This is a great way for you to shelter your taxes for a long time and then start paying taxes once you start pulling money out of the retirement account. Third one, cost seg on your medical billing. This is a very good one. So let's say that you are a physician or you run a law firm. In this case, we're talking about doctors. And let's say that you have any type of medical building. One of the great opportunities that you could have with the real estate associated to your medical business is that you can implement what's called a cost segregation strategy. What that means is we're going to be allocating depreciable life to the building. 5 years, 7 years, 10 years, 40 years. That'll give you accelerated depreciation. What that means is that initially you're going to get more aggressive depreciation, more aggressive non-cash expense. And when that happens, your taxable income is going to be lower. Therefore, your taxes are going to be lower. Now, let me give you an amazing one as well. So let's say that you own your medical building, but you also own a real estate portfolio, offices or multifamily or even single family. So now that you have a cost seg on your medical building, now you're going to have a cost seg in your real estate portfolio on your rental portfolio. So now you're going to have depreciation in 2 areas of your wealth, your medical building, and now you're going to have cost seg in your real estate portfolio. So now you're going to have even more non-cash expense to drive down your taxable income. And when you do that, your taxes are going to be lower, right? You're going to keep more cash, and with more cash, guess what you get to do? You get to expand actually in your real estate portfolio. Like you can buy even more real estate and then double down into it. You increase your cash flows, you increase your tax write-offs, and then you increase what we call appreciation, which is the wealth that the real estate will give you. Now, next one, we're talking about an S-Corp election with strategic payroll planning. The good thing about that one is that if you are operating a single member LLC, you get to elect to be taxed as an S-Corp. And when we do that, we get to assign you a salary. And when we do that, we drive down FICA tax, right? Which is payroll. So we get to actually lower your FICA by assigning a salary for your role in the S-Corp. So we get to lower your FICA by basically strategizing an S-Corp around your single member LLC. So we bring down your FICA and then we do planning for the regular income or the ordinary income for tax purposes in your S-Corp. But yeah, there you go. This is some of the strategies that we utilize for our high income earners client that we get to implement and lower their taxes in a significant way. Benefit once we do that is you get to preserve more of the cash that you work for, and you get to reinvest and keep on expanding real estate portfolio or your wealth in other areas. And now it's time for me to answer a question I get all the time. Are medical professionals considered self-employed or employees? It all depends. We service clients, we service medical doctors and surgeons that are W-2 employees of a medical or hospital institution, and they are employees of that institution. But we also serve medical doctors and surgeons that are actually independent contractors for this institution. They potentially work night shifts, or they work weekends, right? Or they are on call for a specific surgery, right? Or they do rotation. They get paid on a 1099 basis on a specific rate. Oftentimes, we work with doctors that have both. They have multiple jobs. So it could be a W-2 employee, it could be a 1099, or it could be both. And guess what? Strategies for the W-2s are going to be primarily on investments like in real estate and such that are going to give them good opportunity of write-offs through real estate or through investments, right? But then you have the 1099s that are considered self-employed, or they have a relationship with this medical institution. And when you get to do that, then you can form a single member LLC or a professional service corporation. And once you do that, then you get to implement a robust tax strategy that, will get to lower your taxes in a significant way through write-offs, credits, deductions, investments, and so forth. So picture that if you are a medical doctor, surgeon, and you have a W-2 relation with an institution and a 1099 relationship with another institution, you probably have the best of both worlds, because then your 1099 relationship through a business setup can offset through the right planning your W-2s from the other relationship. So you minimize your tax in a significant way from the 1099 relationship. That is so good that's going to give you advantage on the other relationship that you have. Again, my name is Victor Delerme. I'm a CPA, and I love strategizing and find ways for us to actually mitigate lower taxes, find solutions for our clients to actually save more money and keep expanding their future. If you guys would like to have additional information, or if you have any questions in regards to if some of these strategies do apply for you, leave a comment down below, and we'll get back to you and provide you with a consultation, a strategy session that will be tailored specifically for your needs. Again, this is Victor Delerme, and I'll see you on the next one.